Hello and welcome to Financial Accounting. Our topic today is corporations. We will look at the advantages and disadvantages of organizing a business as a corporation and review how corporations are formed. We will also look at the states that have the best and the worst business tax climate for corporations. A corporation is a form of business organization recognized under the law as a separate legal entity with rights and responsibilities apart from those of its owners. Many businesses, large and small, choose to organize as corporations. The owners of a corporation are called stockholders. In many small corporations, there are only one or two stockholders. But in large corporations, such as AT&T, there are millions of stockholders. Ownership in a corporation can be publicly or privately held. A privately held corporation is usually a smaller corporation where there is a limited number of shareholders that stock get issued to, and the stock isn't offered to the public. On the other hand, a public corporation has been authorized to sell its stock to the public. Also, I want to mention here that privately held doesn't mean small. Keep in mind that there are many large privately held corporations. Just look at the list on the screen. Many privately held corporations have billions in revenue and hundreds of thousands of employees. For example, Publix supermarkets with almost 45 billion in revenue in 2021 and 227,000 employees. The corporate form of organization has several advantages: limited personal liability for stockholders, transferability of ownership, professional management, and continuity of existence. Corporations are separate legal entities that can enter into contracts, sue, and be sued. Stockholders are not personally liable for the debts of a corporation. Stockholders' losses are limited to the amount invested in the corporation. This concept is called limited personal liability and often is referred to as the greatest advantage of the corporate form of organization. Ownership rights are transferable. Ownership of a corporation is evidenced by transferable shares of stock, which may be sold by one investor to another. Most corporations have a professional management team that runs the business on a day-to-day basis. The stockholders elect a board of directors, who in turn hires professional managers to run the business. The corporation continues to exist even when ownership changes. For example, the corporation continues its operations without disruption when individual stockholders die, sell their shares, or are no longer owners for other reasons. Changes in the names and identities of stockholders don't directly affect the corporation. There are also several disadvantages of incorporation, such as greater regulation, higher cost of formation, separation of ownership and management, and heavy taxation. Corporations are affected by state and federal laws to a far greater extent than unincorporated businesses. It's also costly to form a corporation. An unincorporated business can be formed with relatively little cost. Forming a corporation normally requires the services of an attorney. There are many online services, however, such as LegalZoom, that can help you start at a relatively low cost. The separation of stockholders from management can create problems if management doesn't act in the best interest of the owners, but rather in the best interest of the management team. And if stockholders don't approve of how management runs the business, they may find it difficult to remove the management group or to make other changes in how the business operates. Corporations pay taxes on their earnings And if they distribute a dividend to stockholders, the stockholders pay taxes on the dividends received. This is referred to as double taxation. When double taxation is mentioned, note that the reference is to C corporations. An alternative is a so-called S corporation. S corporation is a tax designation described in subchapter S of the Internal Revenue Code. If a corporation meets the requirements of the subchapter, it may elect S status. The key characteristic of an S corporation is its pass-through tax structure, which allows passing corporate income, losses, deductions, and credits through to shareholders for federal tax purposes. The requirements for forming corporation are determined by the laws of the state where the corporation is incorporated. The state in which the corporation is formed is called the state of incorporation. The state of incorporation is not necessarily where the corporation does business. A state often is selected because of the laws regulating corporate activities. In fact, many corporations conduct most or all of their business activities outside the state in which they are incorporated. For example, the state of Delaware is sometimes referred to as the incorporation capital of America. Delaware consistently ranks as the best place to incorporate a business, and more than half of the nation's Fortune 500 companies have chosen to incorporate there. The first step in forming a corporation is to obtain a corporate charter from the state of incorporation. To do so, the organizers of the corporation submit an application called the Articles of Incorporation. As soon as the charter is obtained, the stockholders in a new corporation hold a meeting to elect a board of directors and to pass bylaws that will govern the corporation's activities. The directors, in turn, hold a meeting at which the top corporate officers and managers are appointed. And something interesting about incorporating a business. MaxFilings.com offers a map that shows the best and the worst states for corporations to do business. The ranking is based on the corporate tax rate, individual income tax, sales tax, property tax, and unemployment insurance tax ranks. I will post the link to the website in the comments. The 5 best states in 2021 are Wyoming, South Dakota, Alaska, Florida, and Montana. And the worst 5 states are New Jersey, California, New York, Connecticut, and Minnesota. I hope you found this video helpful. If you did, please make sure to subscribe, hit that like button, and ring the notification bell so you are notified when we release more videos like this. Thank you all so much for watching, and I hope to see you all again in the next video.